The S&P is up 1.77% here in after hours following huge news from Donald Trump. And as I talked about in the video earlier today, where the markets were up 2% for seemingly no good reason. Every time, almost every time, in my experience, markets are up 1.5%, 2%, 3%, and there's nothing that you could say like, hey, that's the news today. Usually someone knows something, and there's news coming. Well, I'll be damned. Here in after hours, you got that news. And you got a little bit of that news earlier today with Scott Bessent. Scott Bessent said that the current relationship between the US and China is unsustainable, and basically we need to get this resolved. I don't know if like the economy's weakening and they see something happening that we don't yet. I don't know why they're starting to panic all of a sudden today. There's an old saying on Wall Street, though, that says when policymakers start to panic, Wall Street will stop panicking. And it seems like there was a little bit of a panic today from Bessent and a little bit more of a panic today from Trump. Trump says that the U.S. is doing well with China and nearly every other country. Trump says that we are going to get the baseline of 10%. Trump even acknowledged that the stock market increased pleasantly today. Donald Trump says this is a transition period and it will take some time, something we have already heard before. Donald Trump says, I will not bring up coronavirus with China. But he says if they don't make a deal, we'll set the deal. And he says that China and other countries must reach an agreement. Donald Trump said here, this is one of the big comments, that he plans to be very supportive of China. Here's another big one. Trump says it will decrease significantly, but will not reach zero. Guess what he's talking about? The China tariff. He says the China tariff will decrease significantly, but will not reach zero. Like a 10% tariff, 20% maybe. That's what we're looking at here. Although that's not what Trump said, that's what it sounds like. And he says that China will be pleased. And here's another official headline here from Walter Bloomberg. It says, tariff on China will not be as high as 145%, and it'll come down substantially, but won't be zero. Again, 10, 20%, that's kind of the ballpark that at least it sounds like. Trump was asked if he'll play hardball with China, and he said no. It really seemed like today was a shift from Trump, from the hardball stance, from the hardline stance, if you will, to we want to make a deal with China. Come on, China. Come negotiate. Trump also says that this is an ideal moment to decrease rates, like Powell to cut rate. He says that he prefers Powell to be early, not late. This is the big one. Another big one, along with the China big ones. Trump says he has no plans to dismiss Powell. Crisis over with. Now, this was potentially a crisis in the making, because if Powell was fired somehow by Trump, you would have seen the bond market implode, okay? You would have seen the bond market absolutely crash, okay? Because if the president doesn't like the Fed's decisions and their dual mandate and price stability and maximum employment, and they could just fire them and do whatever the hell they want, why in the world would you own a bond? That would be like if, Johnny Knoxville tried to run Apple. It just wouldn't work, okay? Literally, I think that's a great kind of reference. Johnny Knoxville runs Apple. I would probably sell Apple, okay? Maybe he knows what he's doing. Maybe he doesn't. It's not a risk I want to take with my money. Same is true for the bond market. Now, TLT here in after hours is up 1.17%, which is a massive move for bonds. And I think with Trump getting this reaction in the bond market, I think you're going to start hearing a lot more positive things on trade deals coming from Trump. Because the fact of the matter is, if we did not have the inflation threat from tariffs, which I don't think we would ultimately see a, inflation issue with tariffs. I think it would be more damaging to the economy, and you might actually see deflation, but the trade-off would be a recession. I know it gets a little complicated. Let's just stick to the basics here. Long story short, Trump says positive things, rates fall. Okay? Trump says positive things on trade, rates come down. That's the message the bond market wants, because inflation's really not a problem right now. And if this trade war dies down without any real inflation caused, the Fed can actually start cutting rates. And, well, TLT has suffered recently with the escalation of the trade war. If you start to see bond yields coming down again, that could also be very supportive to the stock market, because your equity risk premium, I don't know if you guys have ever heard of that term, essentially, like, what's the difference in investing in bonds or taking risks in stocks? Okay, if TLT over 10 years is going to pay you 4.5% a year, and you have a risky small cap or mid cap, maybe unprofitable, right, company, there's not a lot of incentive to take that risk in that stock, right? You would want to own just a bond because there's too much risk, right? It would be like if someone was offering you an iPhone 16 for $200, or they were saying, okay, you could buy the iPhone 18 for $1,000. You're probably gonna get the old model for $200, right? That's kind of a good analogy to put on this one as well. Trump said again, would like to see Powell be more active in lowering rates. He also says if Powell doesn't, it's not the end. So that's a huge shift from you're late, you're a moron, all of the things he was saying like a day or two ago, to now, well, I would like to see Powell cut rates, but if he doesn't, not a big deal. That's essentially what Trump said today. Now, as far as tomorrow morning, you will get a speech from Fed Beth at 9 o'clock, Fed Goolsbee at 9 o'clock, Fed Waller at 9:35 in the morning tomorrow. You will get S&P Global Composite PMI, manufacturing PMI, and services PMI. This is soft data. This is Purchasing Managers Index. Okay, so the people that are high up in these specific fields, they basically answer a survey. Okay, so it's soft data. It's not hard data, but soft data has been moving the markets quite a bit recently, so something to definitely pay attention to. New home sales for March will also be coming out, and new home sales month over month for March will be coming out. You do have a 5-year bond auction kind of right in the middle between the short end of the curve, where the Fed really affects, and the longer end of the curve, like 10-year treasury yields, where the Fed does not affect. So based on what demand looks like for that, could also drive a bigger move in the bond market. Lately, bonds have also been driving a pretty large inverse reaction to the stock market as well. So that could also be kind of important. Thursday's our big day with durable goods orders month over month, initial jobless claims, existing home sales, Kansas Fed Composite Index, manufacturing index, and a couple other smaller data points as well. And then you wrap it up with Friday's final numbers for Michigan consumer sentiment. And as I've said before here on this channel, the day that China sits down to negotiate with the US, or vice versa, is the day that this correction or crash is over with. Now, judging on this move here in after hours, this was a big step towards that, okay? Now you just need China to acknowledge that progress, that change of tone, to agree to negotiate something. Then I think we're game on again, right? The S&P at 536 has a lot of room to rise in that scenario, even, again, following this move in after hours. It's really just a question of timing. When does China come to the table? I mean, does that happen over the next couple of hours? Does that take some time? Does China want to negotiate? I mean, they kind of have to. As we talked about in the last video, it's like COVID during 2020. Oil producers, even though oil went negative, they couldn't turn off their rigs. You can't stop that machine, right? It would cost way too much money to do that, right? And that would be a bigger issue globally when things go back to normal, and then there's a oil, shortage, right? Kind of the same is true with China manufacturing. China manufacturing is a machine that you can't turn off, and they're going to start building up a lot of supply quickly. And if that doesn't move out the country, then that becomes a much bigger problem 3 months, 6 months, 12 months from now for China. So I don't think they really have a choice but to negotiate a deal. Question is, how fast do they actually come to the table to actually negotiate that deal? And then ultimately, that's when the pain is over with. At that point, people are going to assume if China gets a deal, everyone's going to get a deal. I think, again, question would be at that point, what does the deal look like? And from what we've seen, what it sounds like, you could have 10%, 20% tariff on China, but that's the ballpark that it sounds like Trump is kind of going for. Okay. Could be just speculation on my part. That may not be true. Let me know what you guys think down below in the comment section. With that said, have a fantastic rest of your night, and I will see you in the next one.